welcome back everyone to our third segment of our second module for accident and sickness. So for this module, we're going to be looking at a couple, for this segment, sorry, we're going to be looking at a couple of different topics. So group disability insurance, we're also going to be looking at long-term care insurance and critical illness. So just because they're all small topics, so rather than just doing mini videos, we're just going to kind of combine them here into this one segment. So the first one that we're going to be looking at is group disability insurance. So like we said earlier in one of the previous modules, that many employers offer group plans to their employees in order for creating more employee retention. And it's another way to just kind of keep their employees on board. So with these plans, what are some of the things that we need to remember? So with these plans, what you remember, we already talked about the taxable benefit and how the premiums work. Another important thing in these plans is that there is something called a master contract. And this is an important term. And it also applies to group life insurance plans that we'll look at in our next module for life insurance in the next module 3. And what master contract is, that means that all of the rights or all of the sort of power here is with the employer. So this is between the employer and the insurer. So notice I didn't write employee. So even though, let's say there's a company employs 100 people and they offer group disability plans or group disability insurance, that master contract is going to be between the insurance company and the employer. So it's not going to be with the employee. Employee is not going to get a copy of the policy. They might get like an employee, like a card that says they're part of a policy, but they won't actually get a policy copy. What this means is that they cannot make any changes. So it's kind of like they can join in on the plan for sure, but they cannot make any changes. They cannot decide how much premium they're going to pay. They cannot decide what kind of benefit they're going to get, how much of a benefit they're going to get. So they really don't have much say. It's just if they would like to join, they can. Again, not really a lot of control. If they were to buy their own individual policy, they would have a lot more control. So I'm just kind of also trying to tell you guys some of the positives and negatives of group disability insurance. Definitely that's one of the biggest downfalls, is the fact that they don't really have any say in terms of how that policy is going to look. But the big positive here is that it's a lot cheaper. So usually, even if you think about just real life scenarios, whenever you if you're going to, like, let's say any sort of event, and if you go as a group, sometimes you get better pricing on tickets, right? So then that's the same sort of situation applies here, because the risk is divided among many. So that premium is going to be much cheaper in a group plan versus an individual plan. And also it covers those that might not get insurance otherwise, because they're not doing any medical. If somebody has any sort of pre-existing conditions that maybe the insurance company might have said, we cannot insure you, if they were buying individual policy, when it comes to a group plan, because they're going in as a group, they may be able to get that insurance. So it definitely has positives and negatives that to keep an eye out for. Okay, so with the plans, there are usually two types of plans that we can see: contributory and non-contributory. And just as the name suggests, contributory is when employer and employee are paying, so both paying. Maybe it's a half, right down the middle split, that the premium is split half-half, or 60-40, or whatever the case is. But the idea is both are contributing. These are usually the most common types of plans that we see, contributory plans. And then the second one is non-contributory plans. And what those are is where employee is paying nothing and the employer is picking up the entire sort of bill here, right? So they're the ones who are paying the full premium. And this is usually for obviously those companies that are well established. A new startup company would not offer a non-contributory plan because it'd be very, very expensive for them. But there are companies that do that, right? All right. And then how do we be part of the plan? So let's say, going back to our example with Tom, joins a company and he really likes the disability plan that they have for group insurance and wants to join. And he joins the company today and he's bringing all of his paperwork ready to join. He won't be able to join that quickly. So there's a certain sort of procedure you have to go through. So the first thing is, in order to be part of the group plan, you have to be actively at work. What does that mean? That means that you cannot already be on a claim, right? So you cannot be on an existing claim and be part of this plan. So you have to be actively working. The second one is you have to go through the probationary period, which is also the waiting period. With majority of the companies, this is between 1 to 2 months, between 30 to 60 days. It's kind of like they're just testing to make sure you are staying, you're not just going to work for a couple of days and leave. So you have to just kind of wait that probationary period out. And then the third one, we have eligibility period. So as soon as that, let's say if it's 2 months, as soon as that second month ends, you have 30 days to decide if you want to be part of it or you don't want to be part of it. So usually with the group insurance plans, it's not that you can decide whenever you want. Let's say you started today and a year later you want to be a part of the plan. They usually give you a certain time. So after that probationary period is up, you have 30 days to sort of decide if you want to be a part of it. And that's considered your eligibility period. So once you go through these different steps, that is how you would be part of that group insurance plan. We'll talk more about group insurance plans later on as well, but this is the overall sort of the idea in a nutshell, how they work, what are their advantages and disadvantages, and how to get on the plan. So we're just going to switch over now to taking a look at critical illness and then long-term care. So let's switch over to our next section. All right. So continuing on with the other two topics that we're covering in this segment, critical illness, CI, and also LTC, which is long-term care. And here we're going to be looking at individual LTC, so individual long-term care. All right. So with critical illness, how this works is that it is a policy that pays a lump sum upfront. So it's kind of like a mixture of life insurance and disability insurance. And it's one of the only sort of policies that doesn't have many limits. What we mean by that is just going to give you a lump sum. You're not going to be asked to provide your medical bills or this and that, and they will reimburse. They're just giving you that lump sum, right? So there's less sort of limits that are put onto that. There is something called the Big Four. So all insurance companies have to insure the Big Four on their critical illness plans. They insure a lot more than that. So usually insurance companies have a big table of everything that they cover that falls under critical illness, but the Big Four are mandatory, right? And those you can find even in your book. If you just put Big Four, you will be able to find them very easily. And those are something that is kind of like the minimum that is needed in order for the policy to be there. And that what falls under that is heart attack, stroke, cancer, and coronary bypass surgery. So those key things are mandatory, and then they have a whole bunch of list of more as well. So with this critical illness, it does have a qualification period of 30 days plus a 30-day waiting period, right? So because this is a different type of policy, so they usually don't have such a long waiting period, because if somebody has a critical illness, they may not have that time to have like a 5-month, 6-month waiting period. So that's why it's kept very short. So 30 days to qualify once you fill up the policy, and then whenever you file a claim, a 30-day waiting period that will be needed. It can be added on as a rider as well. Like you can add a rider of a return of premium onto this. So if somebody is skeptical about this, maybe they want to get it, maybe they have a family history of certain sort of illness, so they want to get it in order to protect themselves, but they're kind of skeptical. So remember, we can always add that return of premium rider in order to help ensure that they will get those premiums back. And then at age 70 to 75, this sort of policy usually ends. It doesn't continue much past that, and then the insurance company will refund those premiums if they have the rider. And remember, that's a tax-free refund as well. They do have an option of a children's policy as well. So if parents get this policy for their kids when they're young, they have that option to convert between ages 18 to 25 to an adult policy without any proof of insurability, right? So they have that option to sort of just kind of continue that plan on and build onto that. All right, so that's critical illness, and finishing off now with LTC long-term care. So long-term care is different, obviously, than critical illness, where it gives a monthly benefit. So it's not giving a lump sum. right? So the idea of long-term care is to provide an income to help take care of someone in the long run, right? So if they need some sort of at-home care or at a facility, so that benefit can be paid to the individual if they're having at-home care, or it can go to a facility if if they're part of a facility and that facility is looking after them. The benefit can just go directly to them. And it can also be added on as a rider, so it doesn't have to be a standalone policy. So there's other riders that can be added on besides the ones that we discussed. So make sure you do glance over those as well. And with this, it generally has an elimination period of 180 days, so much longer than critical illness. So it's a little bit different. That's usually the general. If it is different, then the question will tell you, but usually we see that it is about 180 days that the elimination period is there for. And the benefit period can range. You can select 2 years if you want the benefit to continue for 5 years, or lifetime, right? So if somebody is really worried about this, maybe they don't have anyone to take care of them in their elderly years, they can even select a lifetime for their option for the benefit as well. All right. And how does it work? How are you able to get the long-term care? So there's usually two sort of reasons why this sort of policy or this sort of benefit would apply. So the first one is if someone has a cognitive impairment. And what do we mean by cognitive? So this means you're not able to think clearly, right? So maybe dementia or some sort of illness which is depleting your ability to think the way that you normally would, right? So if there's a cognitive impairment, physically everything is fine, but there's some sort of a cognitive impairment, right? So that would be one reason. And then the second one is now the other way around, that there's nothing wrong cognitively, you're able to think, but however, physically, you're not able to maybe move the way you were. So if you cannot perform 2 out of the 5 activities of daily living, ADL stands for activities of daily living. If you're not able to perform 2 out of the 5, then this policy would also apply, right? And what are those activities of daily living? What are those things? So those are things such as bathing, eating, dressing, toileting, and transferring your body. So moving your body position from one to the next. Any 2 of those 5, if somebody's not able to perform on their own, then they would be able to fit for long-term care, right? So either cognitive or you cannot perform 2 of those ADLs. And you don't have to memorize the ADLs. Like I said, it is an open book exam and we can find what they are very quickly in the book if you forget, right? But just remember that goes with the long-term care. And of course, fine print for this is that you have no pre-existing condition. So when you apply, have to be perfectly healthy. There's nothing that you have as a pre-existing condition. That's the only sort of condition that they have for this sort of for this policy. All right, so that's what we're going to cover in this segment. So we'll continue on with the module in our next segment.